voice in shaping Nigeria's tax policy and dispute resolution framework. A prolific author whose works addresses critical issues in taxation, fiscal reform, public finance, and emerging economic trends. I would like to go on and on, but in the interest of our time, we will just allow Dr. Adeyemi Sani to do justice to the topic before us today, simplifying the Nigerian tax reform, who pays what, and why it matters. Dr. Sani, sir, you have the floor now, sir.
Thank you, Moyi. At some point in time, I was wondering if all the things that you were reading were actually about me. Thank you about this.
You're welcome.
Let me say good morning to our viewers this morning, which comprises participants in this webinar being organized by Apel, and Apel customers that are interested in participating in this webinar. And also, I say a very big thank you to Apel for finding me worthy to be the one to come and present this paper to the teeming audience today on the topic, simplifying the Nigerian tax reforms. Who pays what and why it matters? Let's delve into it. So what are we expecting to see this morning? We're going to be looking at why the reforms. I'm going to be taking a deep dive into that. We're going to be looking at the key changes as it affects individuals, as it affects small and medium enterprises, and as it affects corporates. We'll be looking at hidden wins and incentives that we have in these new reform acts. And lastly, we will be looking at the action plan, what you as an individual needs to do now, what you as a small business owner needs to do now, and what you as a corporate organization needs to do now. Before I go on, let's just look at the quote. And this quote is actually it's from the President of the Federal Republic of Nigeria, in person of President Bola Ahmed Tinubu, when he was signing the Reform Act, the tax reform bills into an act, sometimes in June 26, 2025. Let's look at it together. What does he say? So we pick some things from there before we look into why the reforms. Let's go into it. He said, for too long, our tax system has been a patchwork, complex, inequitable, and burdensome. It has weighed down the vulnerable and shielded inefficiency. That era ends today. We are laying the foundation for a new regime that is fair, transparent, and fit for a modern, ambitious Nigeria. A tax regime that rewards enterprise, protects the vulnerable, and mobilizes revenue without punishing productivity. Is this another political statement? Or does the Tax Reform Act reflect all the things that the president said on this set date? Let's look at it. Why the reforms? Before we look at why the reforms, who are the stakeholders in these reforms? Who are the people who have been making complaints about our outdated tax laws? We look at the taxpayers, which are 1, individuals, SMEs, corporates, you and I. We look at the tax authorities and we look at the government itself. So as taxpayers, what have been our yearnings? What have been the things that we have been talking about? We have been talking about multiple tax collecting agencies. We have been talking about complex tax rules. We have been talking about heavy compliance burden on most of our tax payers. And we have been talking about official corruption by the tax officials. And we've been looking at inefficient tax reform system when it's apparent that taxpayers have refunds from the government. It looks almost impossible to be able to get refunds. Then on the part of the tax authorities, what are we looking at here? We are looking at very archaic and scattered tax laws. We look at tax laws that are contradicting one another. We look at very low voluntary compliance by taxpayers because of the complexities that existed in the tax laws. And we look at unending disputes, when it comes to a situation where the tax authority and the taxpayer do not agree on an assessment and it has to be mediated either by the tribunal or in a competent court of jurisdiction. Then we look at government. Government has the purpose of raising revenue in order to spend on infrastructural development of the country. They want to spend on roads, they want to spend on education, they want to spend on healthcare. Where will this money come from? So government needs to put in place a good tax reform that will enhance the revenue generating ability of the government without killing the taxpayers. So that's why this reform has done what? It has taken into consideration all these things to come with a reform that is beneficial to all the stakeholders that we have mentioned. So why the reform in particular? One is to establish a uniform procedure for tax administration, ensuring consistency and efficiency. This addresses one of the yearnings and multiple collection by tax agencies and archaic tax system. Also, to create a fairer and more predictable tax system that foster compliance and boost investors' confidence. When your tax system is predictable, it means that the taxpayer knows what to pay on any particular transaction that has been carried out. There's no ambiguity, right? So, and the outdated tax laws that we have has a lot of ambiguities, a lot of interpretations, subjected to a lot of interpretation by both the taxpayer and the tax administrator. So this new Reform Act addresses this particular issue. And we talk about revenue mobilization. Now, revenue mobilization, like I mentioned, government needs to raise revenue in order to embark on infrastructural development. A number of our entities, a number of our enterprises and companies are not in the tax net. Why? Not because a number of them do not want to pay taxes, I can tell you, but because of the complexity in the tax law. So government has identified this and they have tried to fix this in the revenue, in the new tax reforms. Hence, once all these things are addressed, automatically revenue generation becomes very easy for the government. Also, because Nigeria is trying to get its place in the Committee of Nations. As such, The tax reform was designed in such a way to align with global standards like the OECD and African Continental Free Trade agreements, the after whatever, to agree with that. Also, we find out that our old laws did not anticipate the emergence of the digital economy. So as such, there were no adequate provisions in the outdated tax laws for the digital economy. So the new reform was designed to capture the digital economy. Also, we've had a lot of, we've been singing this a whole lot of times, talking about the informal sector, informal sector, informal sector. But the informal sector, the kind of transactions that happen in the informal sector is unimaginable. The transaction volumes are high, but these people are not captured in the tax net. Why? Maybe because of the complexity of the tax, the current tax system that we had before the reforms. But what the government has done is to incentivize the informal sector, to woo them and ensure that they are able to register and be able to be captured in the tax net. And for as many of them that are qualified as small businesses, government has designed the new tax law to ensure that their businesses are protected and they are exempted from certain provisions of the tax law. Then lastly, I will call it, it's funny, but this is in a good way. I call it a subsidy. Government reintroduced subsidy in a way, but this is a positive subsidy. And that's what I call income redistribution. Government has looked at the yearnings of a lot of the low earners in the country and the tax burdens that they were carrying. And you'll find out that the government in the past have done a lot of programs where they will say they're crediting people with 20,000 naira or blah, blah, blah. And most of the times, people ask questions. We have not seen anybody that got an alert. But of course, there is this assumption that the other part of the country is where the poorer people are, and those who are the people that are benefiting from this. But what the government has done is that they have introduced subsidy by paying money into everybody's pocket. What do I mean by this? This new reform, the new tax law, what it has done to low-income earners, which I'll be analyzing as the program progresses, is that it has increased, the new tax law has made it such that the low-income earners will be going home with more net pay. What it means is that their take-home pay will be higher than it was before. How and where is this money coming from? This increment is money that was supposed to go into the pockets of the government before, but now is coming into individual pockets. And this is the way of government saying, you know what? This subsidy, you will get it. It's not a abracadabra subsidy, so you get that subsidy. So these are some of the reasons why these reforms have been, the government has embarked on these reforms. If you look also at the fact that the Nigerian tax to GDP ratio over time has been, it's been funny. At a point in time, it has stood it stood about 6% before it moved to about 10%. But government is desirable of this moving to compare with the likes of South Africa. And we'll find out that this will help to show up the tax to GDP ratio. So let's go into the key changes and how it affects the different stakeholders. Now, when we're talking about the key changes, let's first of all take individuals. You understand? Because of course that that is a place where we have the higher number of people. So what are the key changes that the individuals need to look at? These are specified here, but I'm going to be taking a more deep dive into it. Now, in terms of I said revised payee bracket and exemptions. Revised payee bracket and exemptions. Now, with the new Tax Reform Act, I don't want to be, please pardon me, I don't want to be quoting any section or subsection, any chapter or whatever, but I'm going to be telling you what I have read and what we have in this Reform Act. Now, the revised payee bracket, the payee bracket has changed now from what it used to be. Now we have the higher bracket at 25%. Now, how does this affect an individual? What that means is that here you like I told you, like almost a third of low-income earners in Nigeria will cease to be paying taxes in form of payee. And how is this possible? If you look at how they arrive at the tax payable by every individual, it takes the income that you have from all sources, it takes it together, it adds it up, and when it adds it up, then it gives some reliefs. Those reliefs now are called eligible deductions in the new Reform Act. And what are the eligible deductions that you have in the new Reform Act? You have one, you have the National the Housing Fund, you have the Nigerian Health Insurance Scheme, you have pension, then you have interest on loan on owner-occupied house, owner-occupied property. You have life assurance premium that you pay on the life of yourself and that of your spouse. Then there is another thing that has been introduced now, which is called a rent relief. This rent relief is actually 20% of the rent paid, subject to a maximum of 500,000 naira. So these eligible deductions that I just mentioned now are the things that are taken off from the total income, both earned and unearned income that you have had, to now arrive at the amount that is going to be subjected to the tax table. And what they have done now is that any taxable income of about 800,000 will pay zero taxes. And we're going to show it. I'm going to show, please, the slide, can you move forward so that we go and show our viewers an example on this. Now, for people that are earning about 800,000, the tax to be paid is going to be zero, because by the time we compute all this stuff, what will come on it will be nil. But I took time to gross income. So if you look at your screen, you will see 1 million naira gross pay. Pension is what I've done is to look at 1 million naira using the existing law. Don't forget that this new law that we're talking about comes into force 1st of January 2026. So I'm going to be doing this to the comparison with the existing law and what will happen to your pay come 1st of January 2020. So using the existing law, we have the gross annual pay of 1 million, then your pension relief is 80,000 naira, consolidated relief allowance comes at 384,000, so that your taxable income is now 536,000. So by the time they put it on the tax bracket, your total tax that you are going to be paying will come to about 46,000. So about 46,960 naira, right? 46,960 naira. So that your monthly salary will be 83,333 naira. Your monthly payee will now be 3,913.33, and your take home will now be 72,000 naira. Now, when the new Reform Act comes into force on January, now this is what the table is going to look like, and that is what you have on the proposed rate side. Gross annual income is 1,000, pension is 80,000, then there's the rent relief that is capped at 500,000. It's actually 20% of the annual actual rent paid, or maximum of 500,000. So you find out that the taxable income is actually lower. So if you put it on the tax bracket that you have there, you will find out that you will now be paying nil. Now, here, monthly salary of 83,000, still, monthly pay of 0, your monthly net pay is 76,000. So if you now look at it, you'll see that you have a difference of 3,913 that you will go home with more than what you are earning before. So this is the implication of this tax rate for people that are earning this tax band. So we go to scenario 2. We look at people that are earning about 5 million. I'm not going to be going into details so that we have time to be able to cover some other things, but I'll just go straight to the point here. Here, you find out that for people earning 5 million, your total tax is about 627,000, while your monthly pay is 52,000, and under the proposed rate, your total tax is 528,000, while your monthly pay is 44,000. Here also, you'll be you'll be going home with a more net pay than in the proposed regime of 331,000. Now you'll be going home with 339,000. So meaning that you have 8,200 more. Then the last one for the people in the 25 million bracket. For the people in the 25 million bracket. Now I'm going to explain something. One of the things that this Reform Act seems to achieve is to make our tax a progressive one. The higher you earn, the more taxes you pay. So now here, if you look at the people that are on 25 million, you will find out that their total tax is about 4.152 million. Now, in the new regime, it's going to be 4.155. So you are paying slightly more using the new tax regime. Then for people hitting the 50 million, like the Moyi and the Tosings of this world, you understand? So be ready to pay more taxes. Now, for a 50 million, under the existing law, you are paying 8.5 million. But under the new law, you'll be paying 9.3 million, which is 73,450 more. So this shows what the government has tried to do to ensure that the low-income earners, are exempted from taxes, and they have more disposable income to be able to do some other things. Also of note is the VAT on essential food items, then healthcare, education, electricity generation, and transmission at 0%. What this means is that the VAT that used to be there on those these items before used to lead to increase in the cost of these items. So what that means is that now that government has raised it, it means that they're going to be cheaper and more affordable for the individuals. Then there's exemption of stamp duties on rent that's below 10 million. Of course, this also is a cost-saving measure for individuals as well. Before, in the existing tax law, you find out that the other ranks, armed forces, fighting insecurity, we understand how that is heavy on us in the country and how these people risk their lives. And in the existing law, you find out that these people still pay payee, even though their payee is paid to is not paid in the location where they are, but is paid at the central level. So, but now what the new law has done is to exempt them fully from payee. Then there is an expanded tax base which aims at formalizing the informal economy. Now, the government is saying, you know what, I'm going to help build your business. I'm going to exempt your business from small businesses, from CIT. I'm going to exempt you from certain things. But for you to enjoy this, you need to be properly registered with the tax authority. And once you are registered, the prayer of the government is that your business that is a small business today will grow to become a medium business and will grow to become a large business, so that eventually you are able to contribute your own quota to the development of the country. Now, what the government has done is that, okay, the government has looked at it that, okay, we have done all this to make life easier. So we believe and we anticipate that there should be voluntary compliance by taxpayers. So as such, what government has done is that if peradventure there is somebody or any taxpayer who still has it in his mind, it might be the devil pushing the person anyway, that has it in the mind that, okay, I still do not want to comply. So what they have done is that they have given stricter penalties, unlike before, for non-compliance. So by the time you look at the cost you are going to pay for non-compliance when you are caught and what you are supposed to do, you will be deterred from not complying. Then also, in the new law, they have embedded something in the new law. I call it the assignment of debt. So the NTA, that's Nigerian Tax Act, actually empowers the relevant tax authority to assign the outstanding tax debt to accredited third parties like banks and other financial institutions, debt recovery agents, or anyone accredited by the relevant tax authority. So what that means is that if you are owing and your debt happened to be assigned to a bank where your account is domiciled, they know that they will just take their money from your account, and so that is good to actually ensure that you make your payment on time, so that you are not seen to be running foul of the law. So also, we look at some of the changes as regards individuals. I want to talk about what I call residency and tax base. Now, the Nigerian Tax Act 2025 has refined residency rules so that individuals that have strong economic or immediate family ties to Nigeria are considered tax residents in Nigeria. And if you are non-resident, you are only taxed on your Nigerian source income, that is, income that you made from Nigeria. But right now, Nigerians that are tax residents are taxed on their worldwide income. Then people that are remote workers and freelancers, TikTokers are being captured in the new Reform Act. I was reading the daily some times back when one of these TikTokers, I don't want to mention name, was mentioning that the Lagos state government charged him 36 million. and he was bold to say he's making his money from social media. So this is part of this kind of person is supposed to be part of this program so that they have an awareness on getting to know that once you are tax resident in Nigeria or in a jurisdiction and you make income from that place, you are liable to tax. Admitting that you make your money from social media and that you are tax resident already, and you have admitted to the fact that you are owing that tax, and I advise he should go and pay that tax. Also, for individuals, we'll be looking at some of the things that this new law has said in terms of what I call benefit in kind or perquisite. The new tax law has defined the valuation rules that apply to benefits like rent-free accommodation. In a situation where a company gives accommodation to the staff, that accommodation is seen as a benefit in kind. Before, you could be earning 5 million and you're giving accommodation of $50,000 in a Koyi, and you'll still, it still be saying that. So what has happened now is that it is that what the law is saying now is that the benefits, the rent-free accommodation there has been capped at 20% of gross income, and for assets provided by the employer, it has been capped at 5% of the cost of the asset. Now, we've talked about the rent relief, which I have told you, because these are some of the things you need to know. The rent relief is 20% of the annual rent paid, and this is capped at 500,000. Another question could arise: what happens if I own my property? Now, what the law has done is that for somebody who owns a property, if you borrowed money to buy that property, the interest on loan on an owner-occupied property in the new act has been treated as an eligible deduction. Then you talk about CGT. Capital gains tax used to be taxed at 10%, but now the law has made it as it relates to individuals, it has been up to about 25%, and as it relates to corporate, is now at 30% with the company income tax rate. So these are changes, these are key changes as it affects the individuals. So, and I want to believe that our people should understand this and know how this affects them, to know how they need to handle and be prepared for what lies ahead in this area. So we go to key changes as it affects the SMEs. Now, with the new act, there is a redefinition of what a small company is. A small company is a company that has a turnover of less than or equal to 50 million and has total asset of less than or equal to 250 million. And for you to be classified as a small company, you must meet these two criteria together. You understand? It's not like your turnover is less than 50 million and your asset is about 1 billion. So you will not qualify as a small business. So, and what has government done? If you look at SME, even by the database of the Corporate Affairs Commission, and I'm sure we have over 40 million SMEs in Nigeria, which means that the SMEs are the bane of the economy, right? Any positive thing that happens to the SME will have a positive spiral effect on the economy. And government has identified this. And to that end, what they have done for SME is to exempt them from company income tax. Now, so for SMEs now, they will be paying 0% CIT, provided they fall into that category and into the definition of SMEs. Now, to enjoy it also, don't forget that normally, as a limited liability company, you have some regulatory compliance that the law has placed on you. So what the government has done is to relax that rule for the small companies, because they looked at small companies that is some of these costs that burden them and kill them at their infancy stage. So as a result, what the government has done in this new reformed act is to ensure that there is a simplified reporting format for SMEs, if there is a need for that. Now, for SMEs, of course, like I said, there is an expanded tax base because government has designed a way to formalize the informal sector, and that is by trying to bring them into the tax net. And for you to be in the tax net, for you to enjoy the incentives that the government is giving, then you need to properly register, because all companies must register with the relevant tax authority and have a tax identification number, which is a unique identifier. Then also, in order to help the small companies also, the government has exempted them from the newly introduced development levy. In the existing law, what has happened is that you used to have what I call the tertiary education tax, the IT levy, the NASENI levy, and the police trust fund levy. So what the government has done is that they have abolished this and consolidated them into one levy that is called development levy at the rate of 4%. Now, what government has done, the small companies are exempted from this. So those are part of the incentives that the government has given to SMEs. So let us quickly look at, because we don't have so much time, so that we'll be able to give our viewers the opportunity to be able to ask questions if they still need to ask some questions. So we look at key changes as it affects corporates. As it affects corporates, I'm going to be talking about lottery and gaming. Lottery and gaming, before, we did not have well-defined provision for businesses in the lottery and gaming. But now, the lottery and gaming businesses are now taxed under the general corporate income tax regime. And what are called deductibles are now well identified in the new act. Also, we'll talk about the free trade zones. Now, the government has made clear, because they have seen that a lot of companies take advantage of the incentive that exists in the free trade zone without the purpose for which that, without fulfilling the purpose for which that incentive was given. So the provision of the new act now has made it clear that any transactions that is happening in the free trade zone, if over 25% of the product are sold into the custom territory, that means because anybody that is established in the free trade zone, especially with the intention that they are going to be selling their product, they're going to be exporting their product out of the country, and as such, they have export exemptions. Now, but when in a situation they are going to be bringing it into the custom territory means bringing it into where you and I can buy the goods, the product. Now, of course, there will be VAT and withholding tax implication on such. Also, there is petroleum sector reforms wherein they have new rules for royalty payment, acquisition cost, and gas investment incentives. Then also for corporate, you need to be aware of the introduction of the development levy at 4%. What will this be for some entities? Of course, it is a good one. For some entities, it's not a good one. Why? Because the consolidated existing levies that was consolidated into the 4% development levy is such that it's not every company that was employed to pay that fell into the category of paying this. But right now, everybody pays this 4%. Also, what we should know today in the new act for corporate is the fact that the refund process has been enhanced. They put it in the act so that refund of money from the government will be speedy. Then also input VAT, I talk about VAT fiscalization. You know, Nigeria has now codified VAT fiscalization rules, and now they have made it mandatory for businesses to have to join the e-invoicing. You'll find out that the Federal Land Revenue Service has been doing a lot of seminars, right, intimating taxpayers of the e-invoicing platform and the dynamics of the e-invoicing platform. And what the Reform Act has done is that, you know, if you do not comply, there is heavy penalty for it, and they need to know, because what they have done is that they've now introduced penalty of 5 million also for awarding contracts to individuals or entities that are not registered for tax, and penalty for failures to grant access for the deployment of technology. So if you do not allow the official of Federal Land Revenue Service to implement the technology to be linked to your system for the e-invoicing purpose, you will be paying heavy penalty on that. Then on top of input VAT recovery also, we know that VAT rate is at 7.5%, even though when the act was at its bill stage, it was they were trying to increase it to 10%, but of course that did not pass through. So it still remains at 7.5%, and it now adopts a globally recognized VAT principle, which allows to claim input VAT for purchases, including services and fixed assets. So what that means is that businesses can now recover input VAT, provided also that has been subjected to for purchases also that have been subjected to VAT. So these then also I think there are some things on stamp duties as well. Then I'll quickly look at the hidden wins. Now, what are the hidden wins and incentives that are here? We look at research and development deduction of 5% of turnover for innovation. Then we look at the free trade zone TWEX, which means that export retain tax exemption, but there is VAT and withholding which apply for sale in the custom territory. Then there's also the economic development incentive, which introduces a tax credit of 5% per annum for on qualifying capital expenditure purchased by eligible companies within 5 years, effective from the production date. Also, We have small businesses that are exempted from CIT, VAT exemption for formalizing their businesses. However, if you're a small business that is exempted from filing returns and all that, and you choose to, you can elect to want to be filing your returns in anticipation for when you grow big and you start filing. Those are the hidden wings and the incentives. So what are the action plans? What do you need to do? Unlike the TikToker who did not know that he needed to pay tax on his social media income, become aware by attending seminars or webinars like this, right? Become aware. Then, now that you have become aware, carry out what I call a holistic impact analysis on yourself, on your finances, on your businesses, to see how these impact on you. Does it impact positively or does it impact negatively? Then reframe your tax strategy. All the old tax strategies that you're using before will not fly again. So there might be a need for you to reframe your tax strategy. Please note, if your tax strategy now involves some tax planning strategy that will save you, that will give you some tax savings, even though it is legal, the new act has mandated you to write to the Federal Inland Revenue Service to let them know that you're embarking on this particular tax strategy. Then, because what this Reform Act is driving on is majorly on compliance. So there's a need for you to update your compliance processes to be in tune with the new tax laws. Also, there's a need for you to always stay updated. My dear viewers, the Apel asset has done this for you by keeping you updated. So this part of this action plan has been taken care of for you by Apel asset. Then also you need to engage the stakeholders to let them know how this impacts them. For employers, discuss the pay impact with your employees. For businesses, discuss the e-invoicing with your customers. And for the vendors that you have, let them know about the KYC and tax validation requirement by the tax authorities. Then lastly, I would say you should leverage on technology. And with this, you will be in tune and in line with the new Reform Act. Thank you very much for listening.
Wow. Thank you very much, Dr. Sani. You have indeed done justice to this topic. I like the fact that you were able to simplify the concepts and make them easily relatable to a common man. Thank you. I was able to take a few notes. I mean, you said a lot. You broke down the applications, the new tax regime that applies to businesses and the benefits that the businesses will be getting and the individuals will be getting as well.
All right.
I was able to take a few notes. You know, you said that the taxation is now progressive.
Yes.
So, and I was able to reconcile the fact that though the lower income earners would no longer be taxed, but the higher income earners will be taxed just a little more. So that kind of strikes a balance. And I think that's something to commend for the government for. And also you said that there will be no longer CIT, that's companies income tax, and the value-added tax for the smaller companies.
Yeah.
But that comes with a catch that you must register.
You must register your business with the tax authority.
With the tax authorities, exactly. And also, something to commend this new innovation for is the fact that the armed forces are now exempted from PE. Exactly. I think that's a good,
highly commendable, because they lay their lives off for the safety of the common man. Exactly. So as such, the government deemed it fit and worthy to exempt them from PE, which is, I think, is a very laudable initiative by the government.
Very laudable. And also, I think everyone needs to know that the penalties are stricter now. So while the new reforms are trying to, alleviate the tax burden on the lower income earners is trying to drive compliance, and the penalties are stricter. So the advice will be given to you is to familiarize yourself with the new regime and then to ensure that you're compliant. I believe you've been able to get one or two insights from the whole lot of information that Dr. Sani has reeled out this morning. So right about now, we'll be going into the Q&A. I know that because this is a hot topic, there are a lot of people that will be asking several questions. And already we can see that somebody was asking that, the simulation that you did, the Excel sheet simulation, I'm guessing the person is HR.
Okay.
The person is trying to know if they can get that Excel sheet.
Oh, sure. They can get it through Apel.
Okay. Thank you very much for being so kind to release that, because I know it took some brain work to put this information together. Also, somebody's asking that how is the new law going to affect capital gains and on securities transactions? So I'm guessing the person is coming from the angle of capital markets investments.
Yeah.
So is there any change in the usual regime?
Yeah. There is a change. Securities capital gains in security market will actually attract CGT. But what has happened is that aggregate value of 150 million, 150 million, less than or equal to 150 million, and 10 million naira again within a calendar month is exempted.
Okay.
In the new law.
Okay. So that means that if it's not exceeding 150
million in aggregate transaction, then the gains 10 million.
10 million.
Yeah, in a calendar month, so
Yes,
it's exempted.
it will be exempted. Yes. Okay, that's clear. Thank you very much, sir. Also, how does this new reforms, the senior citizens, they are just receiving pension. Is there? I know that typically they are not subject to pay. But has anything changed regarding that?
Not necessarily. We call people senior citizens. You can be a senior citizen, but you already have other lines of businesses. If you have other lines of businesses, trust me, it will be subjected to the relevant provision of the tax. But what you earn as pension won't, right? So that is the way it is. It's just like the notion that people have that churches do not pay taxes. That is not true. What is true about that is that they are not paying company income taxes, right? But the truth of the matter is that the worker in that church that is being paid salary, the church must pay the payee on it. The people that are supplying the church items, right? They must deduct withholding tax on the transaction there and remit it to the government. The pastor, if the pastor is making some earnings, he will pay payee on his on whatever he earns. But it's just that the activities of the church, right, provided is in line with the purpose, the charitable cause for which the church was established, it will be exempted. But if the church veers peradventure into any line of business, say they establish a school, say they establish a bakery, they are doing any business, any profit arising from that will be taxed at the appropriate tax rate.
Okay. So I believe the attendee who asked that question would have gotten it right. That though pensioners are not subject to pay, if they decide to venture into any business or they take on another employment somewhere, they will be subject to the relevant taxes. And also for churches, indirectly, they pay one or two taxes. They pay tax in terms of the employees, that's payee, and in order if they also take on any business, as a church, they will prefer to pay taxes on their profits. Okay, so we also have a question here that says that are there incentives, or tax breaks for startups, especially those that are venturing into the tech business? Is there any, incentive? I know there used to be pioneer incentive.
You see, part of the incentive, like I told you, is the research and development incentive. You understand, which is about 5% that the government is given. It is a form of incentive. right? And the tax credit that is given on qualifying capital expenditure, of course, it is an incentive. And government, aside from the tax reform, they have provisions for tech startups in Nigeria, such that even when they build applications and there is a bid, and the locally grown application will even be given preference, even in terms of government, patronizing them. So those are part of the things that government have to put in place for startups.
Very well, very well. Thank you very much for that response. And also, in terms of, I know that the new tax administration is trying to streamline the taxes, so that it makes it easier to be able to relate and recognize your obligations. So, has this in any way affected the nuisance taxes? The ones that are taxed by the local governments, things like radio levies, bicycle levies, TV levies. People get to complain that they do not even know if these things are legal. So I would like to know if, maybe you could just share one or two.
And so what the government has done, like one of the things I told you is what led to the reforms when we started. It was as a result of the yearnings of the people, right? Multiple layers of taxes that are paid by people. So what government has done here is to harmonize. You understand? To harmonize all these taxes to make it easier. You find out that, for example, when we talk about VAT, sales tax or consumption tax has been completely, abrogated. You understand? It has been repealed. So what government has done, in fact, the where they're going is to ensure that the taxes to be paid is in single digits, not all these multiple layers of taxes. One of the reasons is simplicity. Why is it that people don't want to pay taxes? It's because of the complexity that is inherent in the existing, in the outdated laws. You understand? So, that right now.
Okay. That's true. We can see that all those complex taxes that people used to think that, I don't even understand what applies to me or what this is, that has been simplified. And I'm also I like the fact that government are able to streamline this tax laws into just this form.
Exactly. So they repealed about 6 tax laws to come up with the Nigerian tax Act. You understand? But they still retain the Stamp Duties Act, even though there are some amendments to the Stamp Duties Act and the Custom and Excise Tariff Act.
Very well, very well. Also, in terms of the filing timelines, for each of the taxes, is there any change? Has anything changed, or they still retain the same timelines?
What I would say has changed is before you find out that the tax authority that was used to hammer on returns used to be the Federal Inland Revenue Service. Even though there is the provision for tax returns filing on for state internal revenue services, but what has the enforcement be? You understand? It has been next to nothing. But with this new Reform Act now, the penalties that you're going to pay, you understand, if you do not comply, because what they have done is simplified everything for you, right? So if they have simplified everything, in fact, the law says, that the tax authority do not need to demand from you before filing your returns. So it's an obligation that the law, exactly, and they have stated the date for you to do that. You understand?
So you don't need any reminders.
You don't need any reminders. So what I see happening is like partners like us, other state internal revenue services will come up with tax technology that will assist taxpayers to be able to fulfill these obligations seamlessly.
That's very commendable. That's very commendable. Also, I'll just like you to, I know you explained, but I know that a lot of people are trying to really understand how the rent relief really work, particularly for the landlord. So I'd just like you to briefly touch on it again so that we could get more insight. So for instance, a landlord owns his house and then he actually purchased the house, through mortgage. Yeah. So how does the relief
Work. Okay.
What does it stand to do?
So what is there? Even you see all these reliefs. Okay, it used to be called reliefs. Then in the new act they are called eligible deductions. Now, what these reliefs do is that they help to bring down what your taxable income should be. They are deductions from your gross income. So to now, let me just use the word. I call it taxable income, but in layman's language, that is the amount that will be subjected to tax. You understand? Not the total gross income. So going to your question, for landlords, now in computing the eligible deduction for somebody who is a tenant, now the eligible deduction to you is 20% of the annual rent pay, capped at 500,000. Now, so that is what you would deduct from your gross income to arrive at the amount that tax will be levied on. But for a landlord who is not paying rent, but is paying interest on the mortgage, so the interest on that mortgage becomes the eligible deduction that will be deducted from the gross income that he has in arriving at the amount to that tax will now be levied on for the computation of his payee.
Okay, so is there like a cap on
from the act? What I've read, there's no cap.
There is no cap.
All right, that's all right. So no cap.
So I think the landlord stands to gain more. Okay. Also, the 4% development tax and development levy that you mentioned, is it taxable on the gross income of the company or is it net income? The 4% development levy. So is it going to be on the gross income, the gross revenue of the company?
No, it's usually on profit.
It's usually on profit. Yeah. All right, thank you. And then what is somebody here is asking that what is the effect of the new tax laws on multinational companies with offices in Nigeria? I know you mentioned something about the fact that the tax now considers residency. So if you're
so for multinationals, how that affect them is on the global minimum tax. Okay. That's number one. There is, I told you, Nigeria is trying to align with the global standards. Now, in aligning with the global standards, the minimum tax, there's an effective minimum tax of 15% that's expected from multinationals. And, there are set criteria for this, So what happens is that in a situation where the effective tax rate of that multinational is not up to 15%, the difference will be paid to Nigeria, which is called the top-up tax.
The difference?
Yes. Yeah, to make it 15%.
Okay.
Yes, it's called the top-up tax. So it will be paid. Yeah. So that's part of what is in the provision. Okay. So that needs the multinationals need to know that and be aware of that. These are part of the new things that have been put into the
and it's just in line with
the global standards.
Yeah. Okay, and then just also touching on what I was going to refer to regarding the tax on residency now, like the tax considering whether you're resident in Nigeria or not. Somebody was asking if for someone that shuttles between Nigeria and Canada, and then he pays some tax in Canada, would that not result into multiple taxation if he also spends a lot of time here as well and has to pay tax?
The issue that you just mentioned now gives rise to what is called double taxation. Now, and there are ways to treat the double taxation. Now, for you to determine your residency status, I've told you what Nigeria looks at. Nigeria looks at your economic and family ties. If they're able to look at your economic and family ties and see you are tax resident in Nigeria, then you pay taxes in Nigeria. But the good thing about that is that the government is so sensitive to the possibility of things. If by virtue of you being tax resident in Nigeria, with the example that you gave now, is so that the same concept makes you to be tax resident again in Canada on the same income, which means that you'll be paying tax in Canada and you'll be paying tax in Nigeria. If there's a double tax treaty, if there's a tax treaty between Canada and Nigeria, you understand, you might have what's it called? Tax offset. You understand? What you pay in Canada will be recognized as a tax credit, though you are paid, and is the difference that you now pay.
Okay. I think that solves it then. Then I think as a follow-up question, somebody was trying to ask, I'm guessing it's the same person that asked, that when you say the 4%, the person referring to the development levy.
Yeah.
He said when you say the 4% is on gross profit, do you mean the accessible profit?
Yeah, let me break it for you. Now, before, the what was consolidated to arrive at development levy are what? Tertiary education tax, national levy, PTF, and the IT rents. You understand? And how do I arrive at this? Majorly, the TET, you charge it on the accessible profit of the company. So that process is still the same process. What has happened now is just that the different layers have been eliminated.
Where you have to pay to more.
Do more exactly. So that's the thing.
All right. I think that even makes it easier.
Yeah.
So you don't have to file with different agencies.
Exactly.
You can just pay once. And then if small companies pay zero tax on incomes, does that mean that they do not get to pay tax on their capital gains?
Yeah, I've told you the limit of thresholds that exist, right? So once you do things that is outside that limit of threshold, then exactly. Then there are certain exemptions for even there are charters, the maximum number of motor vehicles that are exempted if you sell this and all that. So all those things are embedded.
So they are already well spelled out the threshold. Okay, and then somebody's asking that for a consultant who works for a company whose company already deducts 5% withholding tax on his salary and remits to the government, is he or she still required to file or pay personal income tax?
For consultant is very easy. For consultant, because your income is not on the basis of the salary that you get. If you are the owner of the business, you understand, you still have some profit. So what most of them do is what I call direct assessment.
Okay.
You understand? It's not like payee. You understand? It's called direct assessment, where you tell government these are the revenue, these are the income I've generated from different sources over the year. You claim the eligible deduction, and the amount that is remaining, tax is applied to it, and the amount that is due, you remit to government. But what you have, the advantage you have as a consultant, if the business is only owned by you, those withholding tax deductions that have been made from they are eligible for you to be used to offset
your tax
obligation. And in the sense of small companies, please note, consultants, regardless of whether you are making less than 50 million
or not,
they are not considered small companies.
Okay, so you're trying to say that for a company that is into consultancy,
like professional, whatever, we are not
all over it.
We are not a small company.
Assets are not a small
company.
Oh wow. Okay, thank you for shedding light on that. And then somebody is also trying to know that he wants you to shed more light on the input tax and the implication when the vendor are not remitting the part.
You see. Now, the headache is not on you, whether they are not remitting. See, what has happened is that with fiscalization and with the e-invoicing, right, that is why they're telling you, anybody you're having dealings with must be tax registered.
Okay.
Once it is tax registered, once the person is tax registered, you have the tax identification number, right, of the person. The transaction that you are dealing with the person is recorded and passing through the. Forget, they know how to have automated. They know how to get it. Not your headache.
Okay. Okay. Then also, I know that from what you said that there is no longer VAT on consumables, things like food. Now, would this apply to just the raw produce in the market, or will it apply to processed foods? When you go to restaurants and then you want to, of course, purchase.
I think if you look at it, you need to look at the intent of the law in this regard. The intent of the law is to meet and to ameliorate the suffering of the masses. So when you're talking about food, because they say VAT is 0% on food, so you should be looking at basic food items. You understand? If you are buying processed, whatever, that means you're not the masses, man. So it's basic food items.
Okay.
Yeah.
Okay. And then someone also wants to know that how does he utilize his that's withholding tax credits on his fixed asset income?
Okay.
Yeah, so I wouldn't be sure what that person meant.
It's not clear.
It's not clear. So if you would like to gain clarity on that question, you would like to simplify it and make it clear. Okay, and then so I know that when we're talking about the person who is likely to be shuffling between Nigeria and Canada, we made reference to the fact that if there was a more say
tax treaty. If there's a tax treaty, yeah,
that would help. So that means that is that to say that the new tax regime does not affect any tax treaty that they have been entered before.
Between you and I, there will be a need to review most of those treaties. There will definitely be a need to there will be a need to review most of those treaties. So that I'm sure government is already working.
All right. We still have some more questions, but I'll just be taking just about 3 more. Okay, and then someone is asking that in ensuring compliance, would there be a possibility for self-declaration on secured platforms, such as the way it's done in advanced countries?
Yeah, that's what I told you, that part of the innovations that will come into play will be the deployment of tax technology. And for you to be able to pass through, you must have passed through the approvals, several approvals. You understand? Data protection and privacy laws, then a whole lot of whatever for your application to be admitted for that purpose. Because the truth of the matter is that all these bills have been passed into act, but the question is, we're looking at implementation. I can tell you, implementation on the part of the federal government seems to be pretty almost sure. But the question is, can we say the same thing about the state internal revenue services? You understand? So because you have a number of state internal revenue services that do not even have websites. You have some of them that do not have platforms for you to be able to file online. So these are things that either they will speed up the process of deploying technology, you understand, to be able to keep up with the new law, or they can be aided by third-party consultants who will form a PPP with them, you understand, to be able to help them to do that.
Very well. Okay, and then so someone was trying to know if the new tax regime is going to affect the levies that they pay, maybe in the local government or any other place. So I think you already mentioned.
Yeah, I mean, most of these things have been harmonized. So just to look at all those approved fees and levies. You understand? So you know which one is by the law and which one is not by the law.
Very well.
Yeah.
And then lastly, you made reference to the fact that the government can now assign your tax debts to institutions and so
Yes, third party.
So for instance, let's say Mr. A is owing the government tax, and then he has an account with X Bank, and X Bank is one of the appointed collection agencies for the government. Is that to say that if a money drops in Mr. A's account, practically speaking now, is that saying that the bank can deduct on behalf of the government without notice? Just
Yeah, the way it is, that is the way it is in the act. But I can tell you there will be interpretation of the law, and there will be legal processes for that to happen. Because, for example, in the existing law, if, for example, an MDA is owing any agency of government, any relevant tax authority money, and a tax liability and assessment that has been established and all that, there's no objection to that liability.
Yeah.
There is a provision of the law that empowers the Accountant General of the Federation to deduct at source and remit to that. So that law is akin to that, but there are certain steps that must be followed before that happens. So I'm sure all those things will be identified and followed before that happens. Otherwise, it will be abuse of power.
Exactly. Yeah. And I believe that is why the government has allowed some granted some moratorium before the law.
Yes, to see how this will be implemented. They test most of these things, and if there are tweaks, of course, things will be changed.
All right. So importantly, and lastly, I know that people would want to be curious as to how they can raise complaints, against, or they can contend or contest the taxes that were levied on them, the assessments.
Yes.
So is it that when I know that I think the new tax act provides for an ombuds,
tax ombuds, and also the tax appeal tribunal.
Okay, so so you can actually represent yourself in this place.
You can represent yourself, or you get somebody to represent you.
Okay, all right. Thank you very much.
You're very much welcome.
It was a really amazing session and amazing chat with you. I like the fact that you're able to simplify, and I'm sure that every one of us has gotten a lot of insight into the tax reform. As a matter of fact, I'm sure you can actually speak like a tax professional now to your colleagues and your business partners. All right. For those that were not able to join us from the beginning and they missed out on a lot of parts of the lecture, of the discussion, you can visit our YouTube page at Apel NG. On that YouTube page, the video will be made available. And also you can follow us on our social media platforms, which will be displaying on your screen currently, for you to get more information on notifications on events like this. Till we see you again next time, next quarter on this webinar. Thank you very much for joining us. My name is Milu Ajegede, and Dr. Sani once again. Thank you very much.
Thank you very much. Thanks, viewers, for watching.
All right. Bye-bye.
Bye.
The night has come and the land is dark and the moon is the only light we'll see. No, I won't be afraid. Oh, I won't be afraid. Just as long as you stand by me. So darling, darling, stand by me. Oh, stand by me. Oh, stand by me. Stand by me. It's the sky that we look upon should tumble.
Passion is the secret to extraordinary success, whether in business, sports, the arts, or generally in life. Those who love what they do achieve amazing things. From our humble beginnings in 2004, our passion at Apel has made us one of the leading financial service providers in Nigeria, expanding our business in a way that captures every aspect of your life. Apel Asset Limited is our flagship company specializing in the trading of securities, including shares and bonds. With our flagship online platform, Apel Alpha, anyone with a mobile phone can easily invest in and own a piece of their favorite company. Over time, our customer base have trusted our services to bring their goals and dreams to life. Great, right? Apel Capital Registrars Limited helps you effectively manage a record of shareholdings in your favorite companies. Using world-class data management, we ensure you can easily claim your dividends and maintain accurate records of your shares across various companies registered with us. Apel Capital and Trust Limited offers comprehensive trust services that support you and your family from cradle to grave, ensuring that all your dreams are realized even long after you're gone. And in building wealth for the rest of us, Apel's fund management license gives us the key we need to effectively balance risk and returns to give you industry-leading returns on your investments. Our mission is to offer top-notch wealth management solutions. We use world-class technology and highly trained experts to ensure you get the best financial support. With our passion driving us, Apel is your partner in achieving financial success. Apel, passion for excellent service.